Hi everybody, Chad Nanke, Associate Broker with West USA Realty at Prescott. And today I have my good friend Jerome Prazak, who is a licensed loan originator with AmeriFirst Financial. Jerome, thanks for joining me today.
Well, thank you for having me here, Chad.
Okay. So the reason why I have Jerome with me today is I got a couple of questions that I get from clients a lot regarding why closing costs in today's world, when somebody buys a property and gets a mortgage, why closing costs in today's world are so much more expensive than it was 10 or 12 years ago. So I had Jerome on if he can briefly explain why closing costs are substantially higher now than they were.
Yes. Part of that has to do with the Dodd-Frank bill that was passed a few years ago now. That's brought in a lot more regulation into our industry. And when you bring in more regulation, that we've had to bring in more people to stay compliant with that regulation.
Okay.
The other part of it you're seeing is when a lender discloses closing costs to a client, it's not only the lender costs that they are disclosing, it's also everybody else's cost. So it makes it look a lot higher than maybe it is from the actual lender. But you've got the title company fees, which have increased also with the increased regulation.
Yes.
We've got appraisal fees, which again have increased. You've got your homeowner's insurance, your prepaids with your taxes, your interest. That's all kind of factored into the increased closing costs that you are seeing, Jim.
And then another thing that Jerome was talking with me about before we started filming is whether you're buying a home that's $150,000 or a
Yes.
home that's $500,000, the cost or the work that's put into doing that loan or title and escrow is the same. So fees are really about the same on a lower end, let's say, purchase than it is an upper end purchase.
They really are, and that's where there is confusion on that too, because people think that it should be quite a bit lower. In a lot of cases, it's not lower when you are getting a smaller mortgage.
It's the same amount of work goes into it.
Same amount of work.
What about interest rates? We know on a 30-year mortgage or a 15-year mortgage, interest rates have remained historically lower. The Fed has been raising their rate as far on their end.
Yes.
We haven't really seen it yet on the mortgage end. What do you think's coming down the pipe, Jerome?
Well, I think what's going to happen, our interest rates have increased slightly, and we'll probably continue to see that. I wouldn't be surprised though if we do wake up one morning and there is a significant bump in interest rates. And that's really what we don't know at this point is how quickly they will go up and to what point they'll go up. The feds are looking at increasing interest rates, but they do want them to rise slowly. And that's just kind of the balance that we have now.
So it remains a good time to purchase real
It
estate.
certainly does.
The market in the Prescott area remains strong. Just a side note, year to date, values as an example in Chino Valley have risen 18%. Not to that degree in the Prescott Valley, Dewey, Humboldt area, but values continue to increase and the real estate market remains strong here. So Jerome, again, thank you for joining me today.
Thank you for having me, Chad.
Talk to everybody soon.